What's going on, and welcome to the Boring Money Show. It's your host, Mr. Boring Money, here to help you print money, stay calm, and enjoy life on your terms. In today's episode, we're going to be talking about the importance of understanding financial economics. Now, what I want to do is clearly communicate that this is not financial advice by any means whatsoever. All I'm doing is sharing what's worked for me, some of the investment principles that I've learned over the years, and this is for pure entertainment purposes. If you're seeking financial advice, or if you have issues with your own portfolio, seek a financial advisor, somebody who's licensed and who's qualified to be able to meet you at your unique needs. This is just for educational purposes and entertainment purposes only. Now, why is this important? This is really important because it's something that I just recently started to really unpack at a high level, especially when it comes to real estate. Understanding the financial, like the finances is very important. Like loan structuring, deal structuring, all that is extremely crucial, but it's also really crucial when you're deploying capital on the blockchain, especially when you're taking on leverage. Now, I wish I had known this before, knowing what I know now. Real estate has some of the most incredible financing options out there. It's absolutely incredible, bar none, because banks will readily and happily give you money to purchase a hard asset like real estate. All right, but they're not going to be so steadily and willing to give you money to deploy capital on a blockchain, even though the cash on cash return, deploying capital on the blockchain, it completely obliterates real estate. It's not even close. All right, I get substantially way higher cash on cash returns. I'm talking like anywhere from like 75 to 150% cash on cash return deploying money on the blockchain versus real estate. Right now, if you listen to the previous episode where I talked about how to wreck your portfolio, and I went through my CADE, more, better, repeat, new framework, you'll understand the only reason why I started deploying capital into real estate is because I pretty much maxed out what I can do on the blockchain in terms of cash flow. Doesn't make any more sense to put more money into the blockchain at this point because it's too risky, right? So, but starting out, deploying capital on a blockchain crushes real estate because you don't need to spend all this time looking for a deal. You don't need to spend all this time analyzing a deal. You don't need to spend all this time, like there's no maintenance, there's no management, there's nothing involved there. You can completely be your own bank when you're deploying capital on the blockchain. But let's say you don't have any money to start out. For me, when I started, I had to take out leverage in order to really hire the mentors that I needed to start learning what I needed to learn about the blockchain and deploying capital, right? So knowing what I know now, I would have went about structuring the leverage that I took in terms of taking on debt to do this way differently, right? So when you're looking at taking on leverage, you want to try and get the best terms possible, right? So you want to either get a long-term, right? Meaning that even though you have a higher interest rate, the terms on it is as long as possible, right? Because you want to, the longer the term on any finance structure or on any loan that you take, the better if you're putting that money to work to produce more income. Here's what I mean, right? I would rather have a $20,000 loan spread over 4 or 5 years versus a $20,000 loan spread over 2 years if I'm going to be putting that money to work, right? The longer the term on that loan is, the more cash flow I get to produce because I don't have to worry about making such a large payment on the loan. And that's why when you're investing in real estate, it's why it's really advantageous to put down 20% typically on a property, because it reduces the amount of money that you're actually taking leverage on, and it reduces your monthly payment, which also in turns mean that you actually have you produce more cash flow in terms of profits. Same concept when it comes to deploying capital in real estate. Only difference is your financing options aren't great. They're not as good as real estate. But there are options that I've started to explore where I've started to learn how to set up financing, how to find financing, how to structure my P&L and my business in a way where it looks very good to a potential lender who wants to give us capital that we can then deploy to continue to build our portfolio. So one of the things that is really important is actually building your credit, right? If you're taking on leverage and you don't have good credit, you're going to get terrible terms. What's going on? I wanted to take this time to quickly interrupt this video or this podcast. If you found this helpful and you're interested in getting started investing on the blockchain, we have an incredible program called the Boring Money System inside of our Wealth Sanctum. What we do is we'll guarantee you'll produce cash flow within the first 30 days of setting up your first digital cash flowing real estate on the blockchain, or you don't pay. So if you're interested in that, there'll be a link somewhere in the show notes for you to be able to apply and schedule a free strategy session where we can look at your portfolio, look at your financials, and figure out what would be the best and most efficient way to deploy capital on the blockchain to guarantee cash flow. Hope to see you on the inside. Back to the show. Right. And the terms, like the interest rate and the terms that you get, dramatically impact the cash flow and the profits that you can make if you're deploying capital in investments. Ideally, you don't want to invest what you can't afford to lose. So it's actually better to not take any leverage at all if you're learning. But if you got to a point where you've reached a level of competence where it's not risky to you at all. Like for me, deploying capital on a blockchain for somebody who doesn't know crypto, who doesn't understand crypto, how to make money in crypto, all the different opportunities in crypto, even have an understanding how to take advantage of it, it's extremely high risk. For someone like me who studies it all the time, who has a ton of money on a blockchain, who's actively doing the thing, is really not, it's not risky for me at all. Right? I know where I can deploy money on the blockchain to produce consistent cash flow. That's not a problem at all. So for me, I was just exploring some options to just understand, like, now that I know what I know about financing deals and how to structure loan packages and things like that, I'm like, if I was going to start all over again, I would have started getting my credit in order. And then I would have started taking, even if I'm a W-2 employee, I would have started actually taking some of my W-2 income and direct depositing it into a LLC, right? Making those direct deposit into an LLC to show that the LLC is generating some type of revenue, right? After showing enough like deposits into that LLC over 3, 6, or even 12 months sometimes, then what I would do is I would actually go, and if I want to get funding to invest in an asset that I really believe in, or invest in something that I've done my research on, I've done the case study on, I've done the CADE method on, and I've actually done a little bit more, gotten better, I've repeated and gone through that cycle to the point where I have enough data to justify taking on a little bit more risk. Then I would explore getting like a business loan, because the terms on a business loan are actually really good if the business is established and has proof of deposits. I was like, well, if I had known this, I would have gone this route when taking leverage versus going the other route and just putting it in my own name. I didn't understand this. I didn't understand the importance of having a operating entity and having like consistent deposits and things like that. And just the consequence of just building good businesses is a lot of those businesses have great deposits. And when I was exploring this and starting to learn it, it made a ton of sense, right? So if I was starting out all over again, knowing what I know now, one, I would have started with a high income job, made money, got paid to learn the game instead of just taking a risk and going all in. I would have got paid to learn the game, right? Getting paid to learn the game is incredible because you can get behind the scenes of a high operating, well-ran business, right? And start learning how to operate. When I started as a personal trainer, I learned this like 3 years later, but I hit my biggest breakthrough when I started working for a personal trainer who was already making way more money than I ever thought was possible as a personal trainer. I got to see how he operated. Like, he was literally paying me to learn the ins and out of his operation. And then I was able to take a leap and build on what I learned from him and started my own thing. And that's the way that I would go about it, is get paid to learn the thing that you want to do, right? And then set up your entity so that you can start putting funds into it to help establish history with the bank, right? And then once you're ready to explore taking leverage, or once you're ready to explore taking debt, even if it's to fund real estate or anything like that, you have the history with that entity to be able to start to negotiate terms when you're applying for funding. All right. So the importance of understanding like how the economics of financing a deal or financing a purchase is really, really powerful. It's a very good skill to learn. And a book that I really loved on this is called The Debt Millionaire. It's a very good book to really understand like the economics of just how important financing asset purchases and things like that is. So just want to jump on here and just kind of share that. It's something I've been learning, something I've been studying, really starting to unpack a lot more. And I've just been opening my eyes. And hopefully for those of you guys who are listening, if you have a high income job, set up an LLC, right? And start, if you have aspirations to eventually build a business or build a portfolio under a business or anything like that, and you want to be able to have financing options, right? You get some great terms when it comes to business funding versus taking on a personal loan. And you also get to reduce the liability that you have when you're funding something through a business versus when you're self-funding, when you're getting the loan in your own name. So hopefully you found this episode helpful. Just wanted to go on a little bit of a rant, just kind of let you think, give you insights into some of the thoughts and the things that I'm thinking about and some of the things that I'm learning on my journey to building our portfolio and really taking our investments to the next level. Till next time, stay calm, print money, and enjoy life on your terms. Deuces. If you found this video helpful, chances are you're gonna find a ton of value in our Boring Money community, where I'm in there live, actively sharing articles, market updates, and just educating you on what's going on in the market real time. So if you don't want to wait for another one of these episodes or another video training to come out, and you want to have live updates on what's happening in the market, go ahead and join the Boring Money community, where you can have access to us and be able to ask any questions that you want, and potentially even get featured in an episode. Till next time, hope to see you on the inside.